You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for one of my favorite times of the week here. It's option block time. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, ever-expanding Options Insider Radio Network. If you're new to the whole lineup, well, first off, welcome. Easy for me to talk today. I'm talking a lot today, but we'll get through it together. And, of course, you can always find all of our great content wherever you find your favorite podcast programs: iTunes, TuneIn, Stitcher, all of our network partner sites. You can find our CME show over at cmegroup.com, etc., and so on and so forth. If you want just one central location, well, then our site, theoptionsinsider.com, will do just fine. It's all available there, as well as, of course, breaking news from the options market, our hot options reports. I know a lot of you guys really like those. We're looking into expanding on those and doing more of that and putting it out via new formats. So stay tuned for that. Of course, a lot of unusual activity, education, all sorts of fun stuff, market share, industry professional stuff. You name it, we got it over there at the mothership, theoptionsinsider.com. Of course, you can always grab our mobile app as well, iOS, Android, and the Fire OS. In fact, the app these days is one of the better ways to get our full back catalog. Our catalog is so extensive now. In January, it'll be a decade. It's so extensive now, it's actually starting to break some of our sites. So we had to actually trim what is available even via our site. So if you want the full, extensive, decade-long history or nearabouts, then the app is probably the easiest place to find all that. Again, to search for Options Insider Radio in your app store of choice. And however you listen to us, including those of you who can join us, welcome. Join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern via Mixlr, Mixlr. And you can stream the show live, ask questions, give little tweaks of the twists of the knife there to the Rock Lobster, all sorts of fun stuff. And Mixlr is the place to do that. And, of course, we tweet that link out and put it out via Facebook and via the website all the time, too. So if you're heading on over there, if you can, join us. We'd love to see you there. And mentioning the Rock Lobster, let's break down who is joining me on the old show today. First off, we got a road tripper. Yes, he actually has left the safe environs, the paradise on earth that is St. Charles, Illinois. He is in the middle of a road trip, but lo and behold, it's option block time. That means everything else stops and the option block starts. So he's beaming into us from somewhere between St. Charles and Ohio. Good old Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the Option Block program. I believe this is your first road trip appearance, sir.
Oh no, I've done this from the Metro train on the way home from Chicago. I've done this from a lot of different places, but it's always good to be here, and this shows you how truly mobile the option block really is.
It is indeed. If he sounds a little tinny, it's because he's coming to us via that magic of Bluetooth listeners. But, we do what we can to get Uncle Mike on the program here today. And also joining us a little farther afield, but a little bit closer to his machine today is the Rock Lobster himself, good old Andrew Giovinazzi from OptionPit.com. as well as some occasional sojourns over there at Carmen Line Capital. Mr. Rock Lobster, welcome back to the program, sir.
It is good to be here, but I never leave Maine if I don't have to right now. Never leave. I do go to Chicago every once in a while.
That's true. I have photographic evidence that you were once in Chicago, very recently, actually. So it's no longer are you the Bigfoot of the options market. Does Andrew exist? Yes, he does. I have proof of it. And I also have proof that he leaves Maine on occasion, very rare occasion, but on occasion nonetheless. All right. With the team mostly assembled and mostly on the program, some of us hither and yon, but most of us together, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what was moving, what was shaking, what was rocking, what was rolling in today's market activity. A lot to get to. Let's start with the big indices first, because they weren't lighting it up, but somewhat a little bit today. S&P off, about ending the day about 1/3 of a percentage point off. The Dow effectively unched on the day, slightly off on the day. And the NASDAQ, tech-heavy NASDAQ, a little bit farther to the dark side, off about 0.5 percentage point. All that red on the screen meaning VIX cash inhaling a little bit today, up about 0.8 of a point to a little bit over the 15 handle now. So I'm not liking that level, because that's not coming in line with my prediction for volatility views tomorrow. I still got a day or so for it to at least about a day for it to come my way. So we'll see how that comes to pass. I've been pretty spot on the last few weeks anyway, so maybe I'm due for a miss here or there, just to make the other guys feel better on that program. And of course, a lot popping off in today's market. In fact, this week's market activity. It's one of the heavier earnings weeks on the calendar. We love it because it's great for us to really sink our teeth into a lot of meaty stuff. There were some big names popping off earlier this week. Let's start in the land of all things overhyped, aka Tesla. I did see one of the Model X's in the wild yesterday, which was kind of interesting. I've never seen one of those before. Interesting looking car. Maybe they'll start usurping all the ubiquitous Model S's that I see all over Chicago these days. That said, Tesla did indeed have earnings earlier this week. They were on the 26th, so yesterday and Wednesday, and that stock, of course, closing right around 202.25 or so. Going into that announcement, they were pricing in a fairly hefty move, about a little over $12, or about 6% on the day. And intraday, they had a decent move. They had a decent range. Intraday, that got up about as high as about 10.50 or so on the day. So a decent range. But then you know what? They gave all that back up. They opened up at 211, and then at the end of the day, their low was 201 again, so actually below where they were trading. So a nice range. If you actually were a little bit adept at scalping, you could have done all right, even if you were a premium buyer in this range. But net on the day, the stock only closing 204.18, so up about less than two handles, about not even 1%. So that $12 plus 6% or so straddle. If you were patient, I know that's a challenge in earnings time. If you were patient, you fared all right with that. But if you were skillful, that's one of those nice things. That's why I often say, options are not a zero-sum game. Usually I mean it on the hedging side. That's usually where that comes to pass. But every once in a while, if you're savvy, you can also, both sides can win in that type of scenario. We also saw another very, very hyped name coming out this week. If I could type the right ticker symbol in, that would help. There we go. Apple, the fruit company, Uncle Mike's old stomping grounds, coming out earlier this week as well. On earnings day, they closed at about 118 and a quarter. They were pricing in about a little over $5 straddle, about 5.25, so about 4.5%. And lo and behold, the very next day, they opened up right around off about $4. So not bad. A little underwhelming from a pricing perspective. They did dip a little lower intraday. So again, if you were patient, you had your chance for scoopage, as they say. But interesting stuff as well. A few more names popping off, including today. But before we get to that, let me bring on my cohorts here. Since we're talking Uncle Apple, let's start with Uncle Mike, sir. What caught your eye in Apple's earnings, as well as the rest of today's activity, sir?
Well, with Apple, I'm actually surprised that they didn't go down further with the announcement they had. It was the first time that they were going to have a loss in revenue, or not a loss in revenue, but they're going to have less revenue than the previous year for the first time in what was it, like 15 years, something like that. And the fact that an announcement like that had Apple only dropping a few dollars like it did was actually very surprising to me, considering the weight of what that news actually is. I mean, the last time that happened, that was back even when what they call the iPod. I believe that was even pre-iPod the last time that happened. So I'm very surprised that Apple did not drop any further. The other thing that I've been noticing lately is it seems that we have a direct correlation to Donald Trump's poll numbers in the VIX. Now that Trump's creeping up in the polls a little bit again, the VIX is starting to increase a little bit. So I'm still holding. We might still have the Trumpocalypse, as we talked about on the Monday show. So I'm not giving up on that as of yet. It still may happen. Aside from that, we've not had a ton of movement in the things with which I watch. S&Ps are down a little bit today. Not huge news. I think we're going to have a little bit more volatility as we get closer to the election. I'm not trying to get political, but I do see the media making this out to be something to where this is close, quite frankly. And so I could see an increase in VIX for that reason alone. So that's kind of one thing that I'm looking for. And the other thing that kind of catches my eye right now is that the shiny stuff, the precious metals, gold and silver, we have not had a lot of movement there either. And I'm curious to see if we do have a delayed reaction. What I mean by that is that bonds have been coming down, and with bonds coming down a little bit, a lot of times the money does have to go somewhere, and it would not surprise me also, combining the fact that I do see potential increased volatility in the next couple of weeks, that the money could filter into the shiny stuff. So that's what's lighting up my tape as of today.
Hopefully the the Bluetooth gods will smile upon you as well. We got most of that, some of it breaking up a little bit. Obviously, the perils of having people beam in live. I don't want Uncle Mike to hold the headset to his face while he's driving. I think the local authorities there in Ohio may frown upon such things. That said, let's beam out to the hinterlands. This is kind of probably heavy season for you guys, Mr. Rock Lobster, over there in the pit chat. A lot of things to break down, a lot of things to analyze, a lot of options activity to break down, a lot of potential trades for your clients / mentees. So what was catching your eye over there today? What was lighting it up in the pit chat?
Lighting it up in the pit chat? Well, I think almost everybody in our chat room faded the Tesla rally to some degree this morning. There were no Tesla giddy people. So that was one thing. I guess we'll talk about some of the other stuff after hours, but Amazon's missed, down $50. So that's a little bit of something we have. I'm just talking to some of the other guys in our chat room, have traded a little bit. Also I think, Apple kind of wants to go up even though it's down. I know, because I think this whole quarter there's no iPhone 7 in the last quarter. So, but yeah, the fact that the revenue went down, I mean, that's what Tosaw has been kind of saying, that until they start, innovating again, show me the growth. They still make tons of money. I mean, but they're just not growing like they used to. And I think the multiple kind of reflects that. But the next thing is, I would say from a volatility point of view, I'm looking at volatility, looking at Trump's poll figures, whatever. And I think the SPX is we kind of covered this. The SPX is in a kind of it's trading like an earnings cycle name right now, because you've got the elections are the 8th. So VIX is grabbing is grabbing 30-day volatility from the weeklies right around, they're kind of hovering the the 25th to December 3rd, something like that. It's grabbing those weeklies, and right now in the SPX, if you look at the November, I believe it is the November 9th expiry and the November and the November 11 expiry, the volatilities for both those are 15, almost 15 and a half, or at least 15.25, somewhere around there. So as long as that, then those, so that's basically about almost a 2% straddle price for the day of X for the election. That's $47. So what happens is, the way, vol works, if liquidity providers hold that straddle value for the November 9/11 cycle, what's going to happen is that volatility is going to keep creeping up because they don't want the price of the straddle to go down. That will filter back to the constellation, to the volatility constellation, all the way back into December, because all of the volatilities there are going to have to rise to sort of keep pace with the demand right around election. So you're going to get sort of a very backward trade setup from the November 9/11 expiry all the way out to December. So that's going to keep VIX up. So we were looking at ways, since VIX is actually, it's almost like VIX is going to be held in suspended animation until the election. That's my supposition anyway. So we're looking for trades to take advantage of that, really low-cost ways to trade VIX. And that basically is why, that's why vol is going up when the market's not doing anything. So that was kind of our subject in our chat room today. And right now it's definitely, that's what's going on. So the vol futures continue to kind of move up a little bit, and the fact that that's how volatility trades. So it's interesting. There's not a lot of market movement, yet the volatility is staying big. So I always say there's got to be a reason, and I think the reason is the election, and probably, as the polls wax and wane, maybe that vol comes in. But at this point, I would be hugely surprised if the VIX closed anywhere near 14 next week. I would be thinking more like somewhere between 15 and 16. And that's what we got.
Got a lot of fun stuff cooking over there in the land of the chat. Well, we were talking, so you were talking about all things coming out after the bell here today, Mr. Rock Lobster, and things are all over the place. After the bell here, we have, of course, the two big A's, Amazon and Alphabet, reporting after hours. And as you mentioned, Amazon, I think the technical term is getting shellacked out there today. They were off about 50 handles at one point. They're off a wee bit less than that now. But again, this post-earnings bouncing around. But ironically enough, that's about what they were pricing in. They were pricing in about a $50 straddle, so right around 6%. And right now in the after hours, they're off about 4.5%. They were off over 6 at one point. They're trading right around 780 right now. But again, that's very fluid as we speak. Also looking at good old Alphabet. And the company formerly known as Google, now kind of the large umbrella corporation that contains everything, including Google and all of their crazy moonshot stuff like autonomous cars and other things like that. They went out today right around 817 or so. They were pricing in about a $40, 39.5 or so, 39.5 straddle, so right around 5%. And so far in the after hours, they seem to be flagging a wee bit, shall we say, in terms of not keeping up with the Jones, not keeping up with the Amazons in terms of net movement. They're moving in the right direction, though, if you're a believer in the underlying. They're up about 13.5 handles, about 1.6% there. So again, at least if that's the extent of the move, we got a while to wait and see if that's true. If that's the extent of the move, then they're going to be underwhelming a lot of their premium buyers out there in all things Alphabet land. Speaking of a bit underwhelming, we also had earlier today, before the bell, we had Twitter. Of course, Twitter, a very drama-prone stock of late. A lot of suitors coming and then falling by the wayside. So it's been an interesting name of late. Of course, a lot of their current price is a result of that recent inflation on all of those bids. And of course, they lost a lot of that valuation as a result now as well. So they're kind of back to right about where they were before all that news started breaking. They were about they were about an 18 to 19 range, and they're kind of near that range again, a little bit south of that actually, but they closed about 17.5 or so today. They were pricing in before the bell, actually, about $2.10 or so on that straddle. It worked out to about a little over 10%, about 12% actually. And then they had a little bit of an intraday range before they gave it up on the ghost and pretty much closing almost unched up about a dime or so on the day. So again, if you were a little bit more adroit intraday, you had some opportunities to scalp and maybe get out for some more advantageous levels. But if you were patient, or if you were a very patient premium seller, you may have a bit of a smile on your face there today. So interesting stuff, Mr. Rock Lobster. Any of those kind of three kind of catching your eye? Do you guys talk Twitter in the chat room today at all, as well as the big names earlier this week? You didn't get a chance to really weigh in on those. I'm sure Tesla and Apple were kind of lighting up the chat room this week as well.
Yep, Apple was. We kind of had a stinky Apple trade, but we're trying to fix it. Tesla, we looked at just basically fading it after the earnings, which was a really good idea. So our chat roomies were happy about that one. The next is in Twitter. We're looking at, actually, since now Twitter is going to make money, or they said they're going to make money on a gap basis, whatever that is. I guess that means they make money after they pay out all their stock options. I like it as a long play. So I think there's got to be an earnings where some of these internet companies, they turn the corner when they kind of figure out what they're doing. And I think Twitter maybe finally, after, I'm not going to say it's perfectly run or anything like that, but if they figured out a way really to kind of monetize their 300 or 400 million users somehow, that's a whole lot of buying power at some point for the company. And maybe the promise will be the promise will be realized. So we looked at some. Basically just like long plays, but finance long plays, looking in the January cycle. So of course, we like to get our juice for free. So we're trying to reduce the cost of the premium. And I think I found a decent way, and I'll probably be adding it tomorrow. So there you go. That's so I think all of that stuff is, you like it when a company finally starts to make some money. So that it has a chance to grow. So yes, all those were all subjects in with the chat roomies this week's.
Indeed, sir. Really quickly, Uncle Mike, before we jump on into the odd block, anything else about these earnings that are catching your eye today, or anything else you want to weigh in on before we dive on into all things odd and dangerous and dubious?
On the earnings front, I think the only thing that was really lighting up my tape, so to speak, was Apple, and you guys pretty much said it all on Amazon Alphabet.
All right, then. With that, we're going to keep on rolling into the darker, the dangerous, the more dubious side of the program. It's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody. Welcome to the portion of the program where Andrew and I, and sometimes Uncle Mike, if he's feeling brave, don our fedoras and our trench coats and proceed to the darker, the more dubious, the dangerous, the place of the options market where angels and level-headed folk fear to tread. But we never claimed to be either of those. Of course, this is the odd block. I'm going to kick things off. This is the name we used to talk about quite a bit. Hasn't been on our radar in a little while, I think at least a couple of months, but we're back at it again. If you were saying, I need my resident biotech, not so much in the cheapy biotech, but in the biotech range, well, then we got you covered here in Gilead. I think it's called Gilead, potato, tomato. Gilead Sciences Inc, ticker symbol GILD, GILD, closing today $75.83, up about half a buck, or a little over 0.5% on the day. This is the name that does fairly decent paper for an odd block candidate, certainly. About 50,000 contracts a day of late is averaging. That's pretty heavy paper for this name. Today, They're actually doing slightly less than that, doing about 45,000 contracts, about a little over 2-to-1 calls over puts. That should give you some inkling of perhaps what caught our eye today. If you want to see what it was that we wrote up on the website today and we referred to as a cage match, the cage match on the 77 strike, just scroll on down to the Nove 77s and you'll see it there kind of popping off your screen a little bit, usurping all of the strikes around it in terms of volume. It was the Nove 77s. We started off seeing a block of a little bit more than 3,000, about 3,100 going up. It looks like paper buy-in for $2.08. As the day went on, another about 2,000 and change went up. Total of 5,655 going up on the strike on the day. Obviously, the latter kind for different prices. They started actually buying all the way up. I started actually buying at $1.98. They bid it up then to $2.08, and it kept going up in scattered blocks therein. That's why we kind of call it a cage match. Sellers are coming in for all those buyers and doing it fairly aggressively. So kind of interesting back and forth going on that strike today. Only about 150 contracts open on that strike. So clearly this is all opening paper. We dug a little bit into the stock, as we are wont to do here, and no stock really going up with these. So these appear to be what they seem like on the surface, opening fairly, not a ton of upside, but fairly upside, more close to at the money, really, closing near 76 today. But we'll say upside calls here in November. And looking back at the past 6 months or so out here in GILD, this thing has certainly trended substantially higher. Back in mid-July, it was trading about 86 to up to 88, and actually earlier than that, back in the previous earnings cycle back in April, it was actually over 100. So this thing certainly has some room to run on the upside if you believe those levels are warranted, and clearly our friend here does. And he's putting his money where his mouth is to the tune of about 5,500 GILD Nove 77. Mr. Rock Lobster, kick us off here on the dark side with your take on someone loving himself some near-term, near upside here in GILD.
And so it's actually, this was in our chat. This actually comes from one of my clients. I said I would mention him. Mel. He's like, what's going on with all the calls in this? So
client plugs here on the show. I'll be sure to send him an invoice. I'm
doing a client plug for Mel because he's a hard worker. Anyway, so the way this looked is, it's how it is, kind of paper buys, lifts the offer, bid stays there, and then everybody comes in and whacks it if the stock pulls back. They step the bid up, more fills, then they step the bid up more, and then they print tons at a price. And that's kind of what was going on. And actually, more clients, because they keep mispronouncing it, actually sent me the YouTube video on how to pronounce Gilead properly.
Gilead. I was close.
It's yes, Gilead. Anyway, so hard G. So that I think came from, I don't know who sent me that. It was Frank or Mike or one of them. So I would stop mispronouncing it during our chat room. So it just looked like good old-fashioned call buying. The stock was just $100 not very long ago. So I don't know what's going on with it, but it feels like, it's a biotech stock that pays 2.4%, is a 2% yielding stock. So it feels like they kind of have oversold it. But anyway, apparently somebody is spending big dollars on some calls because they think the same thing.
There you go, sir. Let's move on to the next name / victim. Over here's the one we haven't checked on in quite some time. This is Love. Good old Southwest Airlines here. Ticker symbol, of course, LUV, Love. Closing today about 39.25, up about a little over 2% on the day. This is the name that does about 7,200 contracts a day today. Doing substantially more than that, over 3x, about 22, nearly 23,000 out there, about nearly 5-to-1 calls over puts. That should again give you some inclination of what the heck caught our eye out here. If you want to find it for yourself, you got to scroll on out a little bit, listeners. Not knock, not in Nove, not even in Dees, all the way out to the Jan 43 strike, where we noticed some size going up on that strike to the tune of scattered blocks going up on the SIBO. Looks like paper buy-in for the most part of the Jan 43s. A lot of them going up for prices around 45 cents. A decent run up there today because those calls actually went out 65 at 70. So if that was indeed all buying, then our friend here is smiling. Interesting stuff. There is some open interest here, about 8,800 contracts. So it is possible that these were indeed closing on the previous thing, in which case maybe not so much smiling over there. And looking back on the past 6 months or so here on good old Love, and it's been an interesting ride for the most part, as a lot of the airlines out there of late. They've kind of felt the Sturm und Drang out there in the oil markets and a lot of other issues as a result. This name, of course, we're having around the 40 handle back in the last cycle around July. Got there again briefly, recently actually, just into coming into this cycle, then getting its wings clipped, pun intended, a little bit again on the last announcement. Again, trading now by around 39 and a quarter. So interesting stuff. Mr. Rock Lobster, I know this one came up on your radar earlier today. What's your feeling out here? A, do you think this is closing? And then B, what's your take here on our friend piling into these 43s here in Love?
They were so cheap. It looks like just where Love's been trading, it would be impossible for them to close it for a win. So they're taking, a loss on them to close? I mean, you certainly can close for a loss, but I think it's just more active writing on the strike is what I would think. But it looked like a call rider where it priced as a call rider. It trades on the bid. I think it's just good old fashioned call writing paper. Like, Love is not going to get that much love. Or $43 Love. Let's put it that way.
I was thinking it went up the other way. I think they're actually selling because it seemed a little bit obtuse at first, and I was hoping for their sakes it might have been a buy because they would have had a much happier smile on face. You think they were selling actually?
Yep, I think they were selling. It looks like it went. They traded on the bid at the time, so that is what it looks like, and it just has it has all the look of a call sale. That's all. It's like a buy rate. So if it was closing. You're closing them for 35 or 45 cents, and the stock's kind of at the bottom of the range. So I don't know how's that working for you as a close.
It's like our friend the other day on Monday's show who was closing 6 months early.
Yep.
So all of it makes a ton of sense. See, that's what I get for being charitable with our friend here and assuming he bought so that he could feel the joy in his face. But no, there's nothing but sadness here. in the old odd block today, selling things for 45 cents. They go out worth 65 or 70. That's never a happy day, unless of course you got something else on the other side. And of course, rounding out our odd block journey today, going to head back to another frequent offender on the old odd block. This is Marathon Petroleum, ticker symbol MPC, closing today $42.81, off about $1.50 or a little over 3%. On the day. This is the name that does, about 4,800 contracts a day. Doing a fair bit more than that today. Doing 366,000 contracts today. So 159 to 1 calls over puts. That should give you some inkling of what the heck went up out here. It was a bit of a funky one on this one, listeners, so bear with us. Looks like we got a bit of the old school call spread, so a vertical call spread to swap. If you're not familiar with a swap, listeners, where you're effectively closing out one spread and then opening up again somewhere else. We do it all simultaneously. So effectively here we have 50,000 of the Jan 50-60 call spreads going up against, hence the swap portion a little bit farther out, the April 50-60 call spreads. We noticed it again, 50,000 times going up in 4 blocks on the Philly. Looks like paper buying Jan, selling April, doing it for 40 cents on the Jan, $1.10 on the April. Open interest out here in the Jan is sizable, about 100,000 or close to it on both strikes. So looks like it's fairly probable that it's closing about 80+ thousand going up total on the day today. So they started off at 50. They decided that wasn't enough. So 80,000 total, which puts us up about 240 again total for the whole spread. Actually, we'd be a little bit. Actually, the other sides were a little bit less. We'll get to that in a second. It was a little bit different on the April's because the April's going up 81, about 82,000 here on those strikes. Again, that was the 50-60. So size paper, however you want to break it down. Nothing to speak of on open interest on these strikes in April. 50-60s are non-existent. There was a 20,000 lot that went up as well of the 45. So to print this big, though, that could be a bunch of things. That could be the paper coming in for some additional legs. It could be the market makers in the pit deciding they got to just lay some of this off and doing it on the 45 strike. Could be the people who facilitated it doing that as well. So there could be a lot of different counterparties on that other 20,000 lot. But still a pretty interesting and sizable paper here in good old Marathon. Take us home, Senior Rock Lobster. What's your take here on all this, these size call spread swaps in MPC?
It's a lot of call spreads.
that is a lot of call spreads.
80,000 call spreads. So somebody probably owns some stock. They're selling the calls just in case the call spreads, in case it doesn't rally too much. Or, I mean, why do you sell a 50-60 call spread? You know, stock's trading 43. I guess they don't think Marathon's making the big move up. I think the other calls, that smaller lot of 20,000 was tagged with stock. It looked like a buy right. So it just looks like a whole lot of buy righty type activity. I guess that's all I can say. And they're keeping that extra upside call for a kicker, which that trade actually long stock with short call spreads. I believe that trade is called the Slingshot because you've got the buy right and you got the extra call in case the thing keeps going. So it's a long delta trade with the extra kicker on the upside. That's the only thing I could think. It's just they rolled it before, or they had probably the sale before it worked, and they're doing it again.
Slingshot, eh? That's a new one to me. I know most of the terms out there, but some of these newfangled ones, we used to call them swaps back in the SPX in the old school days, sir. We didn't have your fancy slingshot terms.
The spread is a swap, but the two spread that's a spread swap, but the actual if you use a call spread to buy right a single stock named stock, then that trade is a slingshot.
I got you. The stock.
So this is a honking slingshot with a swap.
I like our technical terms here on the show. Honking slingshots going up here.
Honking slingshots with a swap. I mean that could be the title of the show. Where can you hear about a honking swap with a slingshot? Or is it a honking slingshot with, I don't know, now I'm confusing myself.
Now we've confused ourselves and undoubtedly all of our listeners. So without further ado, let's keep on rolling. Let's see if we can roll those Bluetooth dice one last time to see if Uncle Mike is up for it, because it's Thursday. It means it's time for a mobile version of the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. This is usually where I welcome on Uncle Mike. He comes on down from the mountain, stone tablets and bubble pipe in hand to dispense some options, wit, and wisdom. Today, he's on the road. I haven't had a chance to check in with him. My minions can't catch up with him because they can't run that fast. So I am completely at a loss as to what he's talking about. So I'm tossing to him completely blind, listeners. I'm a wee bit terrified, but hey, that's the fun of doing it live. You never know what you're going to get. So Uncle Mike, have at it, sir. Let's hope your Bluetooth holds up and that your content is appropriate for all ages. That said, go for it, sir.
Well, we will see. I mean, I just drove by some things that aren't appropriate. It's funny. It said, I saw a billboard. It says, "We love you, Hillary," in this county. And then on the other side of the billboard, it said, "This is Trump country." So only in America can you do something like that. But anyway, getting the inappropriate things put aside, I want to talk today about when you would sell a long-dated option. We talked about this on the show a while ago. I kind of want to go through this again now. Just reason being, with bond yields starting to come up a little bit, and by a little bit, I mean, well, microscopically, there might be a little bit more interest in the bond world these days, but in case it's still not enough to tickle your fancy, it's sure not enough to tickle mine, oftentimes people go towards income-based trades, such as the wheel trade, dividend stocks, that type of thing. So what I want to go through today is, when would I personally ever sell a covered call on a stock, perhaps maybe 8 to 10 months out. And here's my rationale as to when I would do it. I would not do it now, but next week, maybe if we do get, say, I may do it now depending on the underlying, but perhaps next week, if we have some more volatility in the marketplace and you want to hold something for a longer period of time, it may not be a bad idea. So here would be a scenario to where I would consider selling a longer dated option. Let's say that volatility is high. And by high, it's your definition of high. A 20 VIX might not be high volatility if the VIX is going to go to 30 or 40 in 2 weeks. Or a 13 VIX might not be low volatility if the VIX were to go to 7 or 8 within 2 weeks. So my point is step one, you have to find something to where you feel that volatility is high, either on the index or the underlying, depending what you are playing. Once you find that, the second step is, of course, to make sure you like the stock. I guess you can maybe say that's also the first step as well. But if you don't like the stock, you shouldn't be in it. But with that, if you feel that you find a stock that you like, whether it's technical, whether it's fundamental, whatever the case may be, and you believe that you're going to hold that stock for maybe a year or so, then it's something with which to consider. Now, here's the other reason with which I would consider doing it is if that stock paid a dividend. You're still getting some type of income on the stock through the dividend, and you have that long-dated call option on it. Now, what's the advantage of selling a longer-dated call over a shorter-dated call? Well, if volatility remains constant and the stock remains constant, you would be better off selling shorter-dated options. However, in this instance, volatility is high. Because you said it's high, volatility is high. And if volatility is high, what you're doing in this instance is you're owning a stock that you're happy to own anyway. You might even be getting a dividend on the stock, and you're selling a longer dated option. That's money that gets to, that's your money. Whether the stock goes up, down, or stays the same, that money is yours to keep no matter what. However, you also have that obligation to meet with the covered call that you have, the obligation of selling the stock at whatever strike price you choose for your covered call. So with this in mind, the reason that I've done this, and I did do this probably 8 or 9 months ago on TLT with selling some puts, similar concept, and I talked about it on the show, but the reason with which you can do this is that if you feel that volatility is going to come down, then you're locking in that higher volatility. Because if volatility goes down and you're selling monthly options or weekly options, well, great, you're doing really well that first week or that second week, but then volatility just gets sucked right out of it. And then all of a sudden that same strike price you're trying to get a nickel for the following week to sell it, then it doesn't work so well. So my message for selling a longer dated covered call would be if you have higher volatility, it may be a wise idea to look into doing something further out. I apply that concept all the time with my trading, not necessarily going 8 to 10 months out. I have, and I do at times, but look at what the volatility is. And if you're really a front week option seller or a front month option seller, it's not always the best way to go. If you feel that volatility is high and that's going to come lower within the time frame of that 2-month period, 3-month period, 8-month period, whatever the case may be, I would encourage everybody to look at something more long dated. Not saying that that's always the way to go, but it is definitely a way with which to, another tool to have in your toolbox. And that is the Strategy Block Roadshow for today. The last day, we're going to be on the air in October, well, until Halloween. Ha!
Yeah, I'm happy the Bluetooth held up. So you must be going through a better part of the country. Maybe not politically, but at least for connection-wise. So we thank your cell provider for that, sir. All right, we got a little time here on the Thursday show, so we'd like to welcome on you guys whenever possible. If you got questions, hit us up there. A lot of you have done that. So without further ado, we're going to keep on rolling right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the mail block. This is where we get you guys on here with some questions, comments. Really quick, let's check in with our question of the week. We posted it before Monday's show. Let's see how it's unfolding. Got about another day or so if you guys haven't voted yet. And we asked you, is the Trumpocalypse done? Is VIX already pricing in a Hillary Clinton win? Where will VIX close on election day? We gave you the choice of pretty much unched between 12 and 14. Elevated to 15 to 18, which is kind of where we are right now on the low end of that. Spike over 18 or a sell-off below 12. Mr. Rock Lobster, have you amended your vote from Monday, or are you still in the elevated camp? And then what do you think is winning?
I'm absolutely in the elevated camp. Absolutely. I think, there's enough. There's officially now with what less than 2 weeks to go. Polls or no polls. People are nervous, and I'm seeing the volatility. I'm seeing those straddles. The at-the-money straddle on the SPX for November 9th expiration is up, right? With the SPX going nowhere, it's up $1.50 in 3 days. So that there is a rise in volatility. So until I see that trailing off, I'm going to still say elevated, somewhere between, I don't think 18. I was trying to price it out. I think 18 would be tough to get to unless something really goofy happened. But I think we'll be here or higher by the 8th.
Yeah, I'm still staying with my elevated, even though we are in that range. I was kind of thinking slightly elevated, which is about where we are now. So if all things hold steady through election, it'll look pretty good. Uncle Mike, you were the lone picker of the over 18 land. You still feeling that?
But whatever, you can never really trust polls in the media. As everybody knows, but I do believe that even if Trump gets a slight uptick going into the election, I think that it's going to be sensationalized, and with that, it's going to create uncertainty. And I think I'm above 18. I think we're going to have some movement in that VIX.
Well, our listeners clearly agree with you. Some late votes coming in for the over 18 crowd, the adult crowd here in VIX, with about a little over a third, 34% saying a spike over 18 going on the election day. Then it's kind of a virtual tie for second place, really, with about 23% saying unched, 23% saying elevated, and a little bit less, 20% saying sell-off. So our audience pretty evenly split, which is kind of interesting with the slight majority coming in on the spike side. So we'll see how that works off here. We got let's see how much time we have for this. This is a little bit more involved question. I don't think we'll be able to get to this. Let's do a quick one here. This is Trader Honking. He's written in before. He asks, I think you recently attended 2 trading conferences. Would you please share anything new for some of us retail traders who were not able to attend? Or if you already shared them, please direct me to the right place. I think he's referring to, of course, the Oktoberfest and FIA conference. Oktoberfest was in San Diego. FIA was local here in Chicago. I don't think either of you two guys, Andrew, I know you didn't, but I don't think Uncle Mike made it to either. So I guess I'll take this one. First off, if you want some insight into these yourself, stay tuned to our network. In particular, our network feed or our special alternatives kind of conference feed, which will have the audio, should be going out as we speak, actually, from Stocktoberfest. You can hear some of the panels for yourself. We don't have panel audio from FIA, but we do have interviews that I did, including some more going out. Some have already gone out with Bats. I sat down with Bats, asked them why the heck they got into bed with the SIBO. I sat down with NASDAQ, that just came out recently too, asked them why the heck did they buy ISE, put 6 options exchanges under one roof. So if you have those same questions, you want to hear their answers, well, we put it to them here on the network. You can check it out. Again, our radio network feed, the easiest place to get all of that, or that particular show is going to be our Options Insider Radio interviews feed. So you can get that one and listen to all of my interviews. I sit down with quite a few people. That feed's gonna be pretty busy for the next week or two. We got a lot of people who have been cycling through the old studio to get some interesting ones just today before the show. So we have a lot of good ones coming out. The folks from Eris Exchange talking about swap futures. We have the folks from Modern Trader talking about fintech and fin media. We have all kinds of cool stuff coming out. A couple of VCs I sat down with as well out there in the San Diego thing to kind of pick their brains about investing or perhaps not investing in fintech and fintech startups and related investments. Also, one of them was involved in the Salesforce corporate acquisitions team, so he had some insight to share with the Twitter deal and why that might have been on their radar, maybe not. So stay tuned for that. Those will all be coming out on the network very soon as well. But very quick breakdown. Stocktoberfest was kind of a hybrid show, some for retail guys like you and also some for people who are interested in the fintech crowd. So it's kind of a bit of an overlap of the two, which is what attracted me, quite frankly, to both events. To that event, at least. You don't get that intersection very often. And again, you can listen for yourself over there in all things, our chat here is pretty funny, but all things on our network, FIA, and then it's Oktoberfest, and we'll have that content coming out for you soon. FIA, much more, as the name implies, an industry show, so it does involve, you have to be kind of more into the industry if you're into things like credit default swap clearing panels and things like that. That's what's going on at FIA. That said, the vendor hall is pretty cool for you guys to come into Chicago and kind of just get a free pass. A lot of places offer those, and you can go see pretty much all the new stuff on tap for trading platforms, software, vendors, brokers, you name it. It's all down there, 3 halls worth. You can easily spend a half a day or a day down there and kick the tires on all the different platforms, meet people, get different stuff, see some new stuff you might want to use. So if you're on the high end of the trading side, you like to use cutting edge tech, that's kind of the place to go. So I think it's worth it for the retail guys to go for that. And unfortunately, the audio side, I think you can go to FIA. If you search for FIA, Futures Industry Association, you can find some of their panel audio on their site. And again, stay tuned to our network feed for the interviews. Other than that, I think that's going to do it. Great quick question. We'll get some of these longer ones next time. Gamma exposure, all this crazy hardcore. So that's more for like a Monday mail block segment. Now we got to keep on rolling. Right on into... Oh, really quickly, this guy, this is a quick one I can do real quick. This one comes from, it's good until the bear raid. That's a handle. He wants to know, we put out a hot options report today showing 19,000 calls going up in which name was it? Oh, it was Vail. He wanted to know if that meant, does someone buy 19,000 8-strike calls? The answer is no. When we put out those hot option reports, they don't indicate any side. It's just showing you the hot, this is literally what it means. These are the hot options for today. Here's what's lighting it up from a volume perspective. So we show you the volume, we show you the underlying, we show you if it's a call or a put, we show you the strike, and that's kind of up to you guys to take it from there and run with it and see. I haven't had a chance to dig into that one. I don't know if they bought or sold it, but that said, when we put those reports out, those are just showing you net volume. We're not showing you a buy or a sell there. All right, that's going to do it. Let's keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block. Greasy Meatball was lurking in our chat room, and apparently he said something that got our moderator angry because he got blocked. So there you go. Don't get our moderator angry because she will block you. I'll see if I can investigate unblocking him. Let's see if he's earned his renewal here in the chat room. Meanwhile, let's start with Uncle Mike. What do you watch? Actually, before we do that really quickly, let's check back in with the names we were watching here at the top of the show, reporting after hours, including, let's see, start off with Amazon. We said they were off over $50 at one point. Now it seems to have lessened somewhat off about 40 handles now in the after hours. Still slightly underperforming on that straddle, but again, pretty aggressive move nonetheless, and we haven't seen the last of it, that's for sure. Alphabet, again, moving to the upside, up about 1.5%. They were pricing in about 5%, so that one underperforming there as well. All right, that said, Uncle Mike, on your road trip, what are you watching for the rest of this week into the weekend?
Well, I mean, of course, you're just watching the markets in general. I'd like to see if we can still hold some of these levels in the SPX, continuing to watch the metals do not much. But I really think the main story right now, and it will be for the next 2 weeks, is the elections. I know we have a lot of earnings coming out right now, but I think that, I hate to compare it to the Fed, but the elections are going to trump the earnings in terms of macro market movement. Obviously, the individual names are going to move based on earnings, but the election is what's happening these next couple of weeks.
Does seem like it's all election all the time, even though people are saying it's a done deal. We are seeing a wee bit of elevation there in the volatility, and who knows, that may hold. Let's hope it doesn't hold through tomorrow so my prediction comes to pass, but after that, it can do whatever it wants. That said, Mr. Rock Lobster, what are you watching for the rest of this week into the weekend, sir?
I'm still watching the VIX, the goofy VIX, to see if it continues to roll up. So I got one client pinging on me right now. To see if the VIX continues into next week. I believe it will. So, and for the most part, earnings have been pretty good, and the market just has not given one hickey wick to it. So, I think we're just kind of in that election tailspin, and then we're on to raising some rates in December, and maybe, like I said, it's like it feels like a lot happened in 2016, but the market's going to go nowhere. You know, a lot of up, a lot of down, and we're going to end up, only fractionally higher than we started the year. But probably that's not bad, in the meantime.
All right, listeners, that music means we've come to the end of yet another epic sojourn through the world of options. Good point about the unched there, Rock Lobster. I think we're pretty much already there in the Dow, effectively unched, or maybe a little bit better, but not too much there in the Dow. Well, interesting stuff out there, though, as we're watching. But unfortunately, we have come to the end of this sojourn. We got through all sorts of crazy earnings, Amazons and Apples and Twitters and all sorts of fun stuff. Alphabet, all sorts of fun stuff. Tesla even in there on the old show. And, of course, all things unusual activity. Some of your questions, Uncle Mike actually made it through the whole show. Amazing. So before the Skype god / Bluetooth god stops smiling on him, we'll kick it back one last time to see what they have cooking that may interest you. Let's start with you, Uncle Mike. What is cooking in the land of all things going along at RCM Wealth Advisors?
Well, by all means, we got to go long, because Go Long is the title of my book. Go ahead and buy it on Amazon in the Kindle edition for less than the price of a Starbucks coffee, depending on what size coffee you get, but definitely less than the size of a Venti. You can see a very good amount of all my philosophies laid out. I'd encourage you to check it out on Amazon.com, and you can buy the Kindle version.
And Mr. Rock Lobster, same question to you, sir. What's going on, I should say, in the land of all things the pit?
We have a VIX, funny enough, VIX webinar on November 5th. So sign up. It is more than Mark's book. It is more than Mike's book, but we do the learning live. So it depends. It depends how much you want to spend. Do you want live or do you want a book? Nobody reads anyway anymore. So take our live webinar and learn something, and you might be able to afford Mike's book.
There you go.
I hope so.
There you go. If you like live, join us every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. Don't make the greasy meatballs mistake. Don't piss off the moderator, because you will get banned. All right. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And, of course, for sending in such great questions. We'll get to more of them on Monday. Don't you worry. And we'll see you then for more of The Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.